Hey everyone, Scott here. So early rate cut, is recession here? Are the rates going to cut in September? Now there are some signals that rates actually may in fact be cut in September, and the people sending these signals are the big banks here in Australia. Also, New Zealand has just cut its official rate, and there's a few things going on in the economy. So check out this video, guys. Stay with me because I'm going to give you a number of points here which do indicate, number one, rates may potentially be cut in September. In addition to that, there's a clear line of sight now. We are in the easing cycle. Rates will not go up. They are only going to come down. And what are the consequences of rates coming down? There are some positive consequences and some negative consequences. So let's get into it. We're going to dive into the topic that's got everyone talking, the possibility of an early interest rate cut by the Reserve Bank of Australia in September. Yes, you heard that right. Despite what the RBA governor has been saying, there are signs that rates might drop as early as September. But why is this now a possibility? Well, first, let's talk about what's happening on the ground. Mortgage arrears are ticking up. Take a look at this chart. Now, this is the number of Aussies defaulting on their mortgage repayments, and we've seen a steady increase since 2020, with more homeowners struggling to keep up with their payments. Now, here's the kicker, guys. So while mortgage defaults are rising, many Australians are actually choosing to default on other bills first, like utilities, credit card payments, just to keep their homes. This is a clear sign of financial stress. There's a few articles on that. There's some bank data on that. Now, add to that CoreLogic data does show a significant rise in homes being resold within just 3 years of purchase. So it looks like people are starting to sell off their homes, not to make a profit, but just to get out of paying a mortgage because they're falling behind. Now, what you have to understand is that a mortgage is currently at 6 to 7%, but you can rent for 2 to 3%. So it's still a lot cheaper to rent than what it is to own. Now, here's where things start to get interesting, because despite the RBA holding rates steady, major banks like Westpac, NAB, and ANZ have started cutting their fixed mortgage rates. Now, Westpac has just dropped its 1 year fixed rate from 6.69% to 6.19%. That is a huge drop, guys. That is a big drop on the 1 year fixed rate. So banks are starting to cut their fixed rates. This is a clear signal. Now, banks are not only dropping the interest rates on their fixed rate for mortgages, but they're also dropping the rates on their term deposits. So this is where people put money to earn interest, and they're starting to drop that as well. Now, for me, these moves are a clear indication that the banks are betting on a rate cut. Banks don't just make these decisions on a whim. They have access to a wealth of customer data, and let's be real, they have a pretty good sense of what the RBA might do next. Now, the RBA governor has been clear that they're not planning to cut rates this year. They've held rates steady for the last 6 meetings, citing persistent inflation as the reason. But here's the contradiction. While the RBA is talking tough on inflation, the banks are actually preparing and setting themselves up for a rate cut immediately. So you have to ask yourself, what's really going on? The RBA is under pressure to bring inflation down, but the economic reality on the ground, rising mortgage stress, sluggish job market, and global economic uncertainty might force the RBA's hand sooner rather than later. Now, the banks have a lot more data. They've got their finger on the pulse of consumer behavior. They're looking at these defaults. They're looking at mortgage arrears. They're looking at the number of their clients that are calling up to get some concessions on their repayments, extensions, and so on. And they're starting to prepare for a rate cut, guys. Now, this is not just an Australian thing. Across the ditch in New Zealand, the Reserve Bank there has also cut their rates. I did do a video on that, which I'll link below so you can check out what's going on in the New Zealand market. That kind of tells us a little bit about what could happen here in Australia. So what does this all mean for you? If you're a homeowner, you might be wondering whether now is the time to lock in a fixed rate or wait it out. Well, wait it out, guys, because rates are going to come down. They might even get down to 3.5%, 4%. They're sitting at 6 or 7% right now. Now, given the bank's moves, it might be wise to watch closely in the coming weeks. They seem to think a rate cut is coming. So like and subscribe to this video, guys. I'll keep you guys updated. Now, for savers, lower term deposit rates means you may want to find somewhere else to put your money because they're starting to cut the rates on those term deposits. So in conclusion, guys, while the RBA is sticking to its guns on keeping rates steady, the big banks are signaling something different. They have access to more data, possibly even insider knowledge, which makes their moves worth paying attention to. Whether or not we see an early rate cut in September is one thing. The economic landscape is shifting. We do know that. We've got to be prepared. So guys, just like and subscribe. I will keep you updated. And if you did find this video helpful, make sure to hit the like button. Also, I'd love to hear your comments. What do you think is going to happen with rates in the next 12 months? Let me know.